All right. Welcome to the Tuesday afternoon closing playbook for August 26th, 2025. How's everybody doing? If I had mariachi music on hand, I would have played it for Taco Tuesday, but I don't. So we still getting some used to some of the options we have with this new platform with playing the music and the audio while we're doing other things on our systems and stuff like that. So still kind of working out the kinks and seeing as we can have this, starting soon countdown going on and letting you guys know what's coming up next and how soon we'll be starting without us actually having to like reopen the room like we do with Zoom. With this new platform, it's like an always open room. So we have this up here, so we don't really have to like open the room a half hour or an hour in advance and kind of play music the whole time and stuff like that. We can actually get work done on our end while everybody's just kind of waiting for start time. So I'm not sure how much we'll be doing the music, that far in advance anymore, but we'll see what happens. This platform gives us a little bit more freedom to have something up on the screen without us having to like be in the room and dedicated to the webinar yet. So it's a little helpful to us, but we'll see what we can do about getting you guys some music and while that's happening. All right, let's see here. Let me go through some pregame stuff for you here. We have people in here that are brand new. The closing playbook is a free daily live webinar that typically provides a fast-paced end of day trading session, and we also try and throw some additional educational content in there, like a daily recap or planning for the next day, something like that. But we typically focus on trying to get some trades in the last half hour of the day. Today will be a little different. We'll talk about that in a minute, but we also sometimes have special guests, which is what we're going to have today. So we'll get to that in a sec. With a lot of our different URLs and domains and brands and programs and everything floating around, I'm just trying to cover, at least for this week, for everybody that's been here for a while and has seen kind of some of these names change and things like that, just kind of like what's going on. So Prosperity Pub is the brand that Nathan and Graham have been working independently under for quite some time up until now. And the Trading Pub is the brand that Lance at Bolito has been working under up until now. And now we have this new Money Crew brand where all three of them are coming together to do events together, design programs together, share information, and kind of present a complimentary set of offerings to everybody under the new Money Crew brand. But we recently had an issue with the new Money Crew domain, so we've put some of our links under Markets PG, which is our umbrella brand. And we don't really market products directly under Markets PG, but it's the company that owns all of these brands. So we are using that URL for this room and some of the new Money Crew links and stuff like that. So it's all one big family. We recently moved to this new platform from Zoom. I know that for some it's been good, for some it's been less than good. Change is always a little bit of a challenge, even if it's for good things. So I just want to fill people in a little bit on why we did that and why we're putting everybody, including ourselves, through change. One reason is that we can have this 24-hour day, 7-day a week persistent room where you can come in, you can always see something on the screen about what's coming up next and how long before it starts. Give you the same URL for all of the live events that we're having. So right now, opening and closing playbook are on the same URL. Eventually, all of the programs that are live from Nate, Graham, and Lance will all be in the same place. We're just kind of gradually working toward that. And it also allows us to do a whole bunch of customizations, respond to customer requests like yours when we're in here and you're asking for features. We're adding them on a weekly basis. So it's really cool that we have input with the developer of this, unlike we do with Zoom. So that and a bunch of other features, we're hoping it'll be worth the trouble for the switch to be able to do all these things that we can do now that we couldn't do before, and moving forward, we'll be able to do even more. When you come to this room, if you start out with this join the chat page, please make sure you do not click on the login here link. You do not need to log in to join this webinar. This is not where the members area is. This is not you're not going to be able to successfully log in. We're removing that login link, but until that login link is removed, just ignore it. just type in whatever name you want to be seen as in the chat and click join. That's all you have to do. Once you're in, if you want, you can click that hamburger menu, those 3 lines at the top left, to shrink the left column. You don't need to see a whole bunch of blank green space. You can increase the size of the video of the presentation by clicking that button and shrinking that column. Down in the bottom left is a speaker button that is a mute unmute toggle. So if you, for some reason, all of a sudden aren't hearing us at all, double check, make sure you're not accidentally muted, or if you do need to mute your audio, you can use that button. In the bottom right, there are 2 icons for changing the size of the presentation. The one on the right, the double arrows, will make the presentation itself full screen and hide everything else. So if you're looking at a chart and you're having trouble reading the chart or something like that, you might use those. If you want to be able to do something else while watching or listening to the presentation on your device, you can click the icon on the left, which is a little box inside a bigger box representing picture in a picture. And what that'll do is it'll shrink the video down to a little floating box on your device, and you can do something with your web browser or anything else underneath that, and you'll still be able to see and hear the presentation. Now, that is device dependent as well as browser dependent. So some devices can't do it and some browsers can't do it. We seem to be having the most luck with everybody on the Chrome browser. So give that a shot if you want to be able to reduce or minimize the presentation so you can do something else in the background but still be able to see it and hear it. Try using the Chrome browser, try using that picture in a picture, and let us know how that goes for you. There's a slider underneath the video that says low latency, and when it's lit up yellow, that means it's on, which is the default setting. I recommend that everybody turn that off. What that'll do is increase the quality of the video and audio and cause just a few seconds delay between when we are showing something on our computers and when you see it on yours. But those 5 to 10 seconds are well worth that short, practically unnoticeable delay in order to get the best quality video and audio so you can see all the details on the screen and hear us clearly. And lastly, there's an icon where if I post a message as a host or Nathan or Graham posts a message in the chat, you can hover over one of our messages and click that speech bubble in a speech bubble, that double speech bubble icon, and that will allow you to private message whichever host you're clicking on and send us a private message, either a question that you don't want to share with the group or provide us with, your full name or your email, your phone number, things you may not want to post in the public chat. All right, going on to some links. If you scroll down below the video, you'll see in the announcements section, there are a whole bunch of links that I put there. So you don't need to copy any of this down. They're all in the announcements section right now for you. I just want to go through them real briefly. The main link that you should be using to get to this room for opening and closing playbook is marketspg.com/NMC-live. That will always take you to the live event. We do have one link for the most recent opening playbook and most recent closing playbook replays. These are going to be the most complete and most recent replays. And then we also have a YouTube link for slightly older replays that may not have the full sessions on them, but they'll get you the content in the beginning of each session for sure. But not every day, in the history of doing this is on there. It's just the last couple of weeks, and there may be some missing dates in there. If you haven't signed up for the daily scan, that's an email that also comes along with occasional text messages that gets you content from Nathan and Graham once a day that isn't really anywhere else. It's stuff they put out in what they call their daily scan email. You might be able to come across some of bits and pieces of that throughout different areas, but it's a nice, concise way to get a daily update from them. You can sign up for that for free at that URL. I also provided the URL for Nathan and Graham's Telegram channels. If you're not familiar with Telegram, that is just a communications and messaging app that you can download on your computer, tablet, or phone, and you can get frequent updates from Nathan and or Graham through that. And it's really the best way to stay in touch with those guys and the best way to find out about new alerts that are coming out for the programs you're in, as well as like special events that are coming up, live sessions and things like that. I'm sure most of you are in this already, but for those that aren't, we do have a membership area associated with these opening and closing playbook sessions. It's just $1 to get in, and it gives you all kinds of educational stuff from Nathan and Graham, training videos, online calculators for calculating your costs and profits on spreads and things like that. So a lot of really cool stuff for just $1. And it also makes you a member of something if you're not already a member of one of their programs. It's the cheapest way to, so to speak, become a member and get invited to member-only events like the one we had this past weekend. And then I threw some other links in there that might just be helpful to you. A guide on paper trading, which if you're new to trading or just new to a particular program or strategy, you might want a paper trade, which is what the brokerage houses call the practice trading accounts, where you can do it in a real way, but without real money until you feel confident that you want to be able to, that you'll be able to trade successfully. A guide to leveling up your options permissions for taking more advanced option spreads and things like that. And then a guide for our one-click members area and our customer service live service. So most of you probably already know, but today in Closing Playbook, Nate and Graham are out for annual company meetings because they're very important people, and us slightly less important people are going to be here to keep you entertained. I will be here, and our friend Jeffrey Turnmeyer, who's one of our professional traders in our network, is going to be here to show us how he runs technical analysis on stocks, walk us through some high probability setups, and teach us how we can spot these setups and set up automatic alerts to catch them. So that'll be really cool. And we're going to get started with that right about now. I think Jeffrey is here. Let's see. Hello, Jeffrey.
Hey, I think I'm here.
You are here. I see you. I hear you. How you doing, bud?
I'm doing all right.
Awesome.
Just trying to, another day in paradise, just trying to make do.
Yeah. Well, at least the market's not looking quite as miserable as it was Tuesday last week. But you seem to make money no matter which way the market's going. So I don't know if you even care.
Sometimes I get lucky,
Yeah, you get lucky. We'll call it luck. All right. Well, what's going on with you today?
Well, I got invited to be here on Closing Playbook because I guess, Nate and Graham start a new show and then get busy and forget that they don't have anybody else to cover the show. So invite me on to cover.
You're playing safety today. Yeah. All right, cool. Well, if you want to share your screen, I can pop that on the stage and we can get going with your lesson here.
Let me see. One of these buttons might let me do it.
Yeah, a little plus sign with a screen around it there should do it. Or
let's see. Yeah, I only have let's see if this eeny, meeny, miny, mo, which one's the right one? I don't know.
You only have 17 screens, right?
Well, I've got at least 2 and they're numbered weird. And then I've got only 14 browsers open. So let's see. That's not the right one. Let's try another one.
All right, let me see what's going on in the chat while you're doing that.
That's not the right one for sure. There we go. Let's try this. Try that right there.
All right, looking good. Cool.
And I do have.
Go ahead. Sorry.
I was gonna say I do have live alerts tied to my TradingView account that go out into Discord, so you'll see alerts pop up constantly, and those are feeding my trading alert systems.
All good. All right, I'm gonna make us real small so that they can see your screen share as well as possible. I know a lot of our people are here on small devices, so we try and maximize it for them. All right, take it away.
Yeah, so I'm gonna turn off this and add in my favorite technical analysis, which looks exactly the same as what I just turned off, but I call it the market roadmap. I'm going to add this on the chart really quickly. Looks the same. As you can see, I can turn this one off and turn this one back on up here. Looks the exact same. But so what I'm going to do is I'm going to share that code with you right here. Freebie. You'd have to type it in yourself. Of course, I've actually got to open the right thing here.
If you want to Slack it to me, I can drop it in the chat for everybody. Or I don't know if you're in the chat or not, but
I mean, we do sell this, so for an easy button, we sell it for $5. But I'm just gonna show it off here for free. If you want to copy the code, screenshot it right there for you. You can type it in. All the little doodads in here are important. You can't skip stuff. So you got to type this whole thing in if you want to use it. right there. And if you don't type it all in properly, it'll give you an error. It won't work. If you just want an easy button, could probably drop that to you, but it's on every YouTube video I do. Links in the description. jeffreytrader.com/YouTube. But yeah, there you go. And so once you have that, you'll have this little cool cloud here in orange. And that's going to be the basis of the first technical pattern I'm going to teach right here. And this is a prime example right here. We've got one that completed to the target, and we'll go through that here right now. So what I'm looking for price to be in a trend. I'm a trend pullback continuation trader. So how do you know when a pullback's done? Well, that's what my orange line here is for. Right here, like that. So this is a trend going up, making higher highs, higher lows, but then the trend exhausted and pulled back and found support. Now, I call this handy dandy line my roadmap line. And this is a daily chart, so it's a daily roadmap line. So if you ever hear me say anything or read anything from me or see any update and I'm talking about a RML roadmap line, a daily roadmap line, daily RML, that would be what we did right here on Chewy. Now, the high probability pattern that everybody talks high probability patterns. You watch YouTube, everybody talks about just find a high probability pattern. Nobody puts numbers to a high probability pattern. Like nobody really does. So I'm going to show you the high probability pattern, and then I'll show you the numbers behind it. Now, this was the trend. This was the pullback. There's the support. Here's the reversal. When we got that first daily close above this pink line right here, 618, it's a 618 fib line. When we got that close above that, it set up my high probability pattern for price to go from here up to here. That line, the 1272 extension, 127.2% extension of the pullback. Now, I like to up the win rate just a little bit higher because this zone tends to be a fuzzy zone. For a long time, I just drew a box around it and said it's the fuzzy zone. We might hit the bottom, we might hit the top. But then the team wanted me to put numbers to it. Everybody, JT, you got to put numbers to it. You can't just say it's high probability. So I ran a bunch of back tests, and I figured out that 90% of the way to the 1272, which you take 1272 and you multiply by 0.9, you get 1.1448 right there. So I added that line. That's 90% of the way. Now, statistics for this thing. Right there, 74.8% across, I think, 100,000 trades I've got now on all different time frames. 74.8%. Once we get the close above the 618, once we've made a high and a low that hit the roadmap line, whatever time frame we're on, this one's on a daily chart, we get the bounce that comes up and does a candle close above the 618, which was that first candle right there. Now activates this 74.8% likely to go higher and hit that 1.1448% extension. Now, the 1272, 70%. So you lose about 5% by going for that little bit extra right there. 5% probability. But I don't know about you. I mean, 75%, that's pretty smoking hot.
Pretty smoking hot.
Yep. Pretty smoking hot. Yeah. Now, people want to see the numbers, right? So I brought some numbers. Brought a bunch of numbers. This is thousands of numbers. In fact, on this spreadsheet right here, there are 56,746 trades across. This goes all the way back to 1968 on almost 4,000 tickers. On the daily chart only, 56,000 trades. And then I have the 30-minute time frame I've tested. I've got the 5-minute time frame I've tested. I got the 1-minute time frame I've tested. So this is a high probability trade. And how often does it win? Just on the daily chart, 74.7%. I said 74.8. It rounds up with other time frames added in as you get closer to 100,000 trades. The average duration just on the daily chart across all of these tickers, 42.8 days. But that's candles, 42.8 candles. The candle maker for the market, not open on the weekend. We don't get a candle on Saturday and we don't get one on Sunday. So when you do this, it actually lasts almost 2 months for the average right there. 43. Now across 100,000 plus trades, the average gets closer to 45 across all time frames. So I usually just go with that. It's a little more conservative than 42. And then we come over here and look at the standard deviation, which is right here, this number. That's 35. Now, interesting thing about standard deviations, if you go and take an average, this is where people really get messed up on high probability stuff. So an average is 45 right there. Now you add one standard deviation to an average. Average just gets you right in the middle. 50% of stuff longer than the average, 50% below the average. Take you and another driver on the road, 2 cars on the road, me and David. One of us is above average, one of us is below average driver. Doesn't matter what the average is. One of us is better, one of us is worse. Think about that for a minute when you're out in traffic. Now,
I think about it every day.
So you add one standard deviation to something, and that actually covers 61% of all cases, right? Well, I don't know about you, but running out of time, if I'm going to buy an option, I don't like to run out of time. And just covering 61%, that's not very good. But this gets us 80 candles, essentially. 80 candles for 61% of the time, almost 62. Now, the funny thing is, you add a second standard deviation to this, and you bump this up to 95% of the time, you don't run out of time. That's the beautiful thing about 2 standard deviations. You ever wonder why Bollinger Bands use a 2 standard deviation from the mean? This is why, because 95% of the time, you're going to stay within. At least 5% of the time, you're out. And if you're out 5% of the time, it's high probability you're going to come back in. That's why Bollinger Bands use that 2 standard deviation. Now, this one right there, 115 days. That gets us 95%. And if we wanted to crank this on up to 99%, we add a third standard deviation right here. This gets us on up to 150 candles right there. That's 150 candles. So it's closer to 210 calendar days, roughly, when you actually take into consideration weekends and holidays in the market. That's pretty cool. Now, this is just on a daily, but it works the same on all time frames. So even if you were trading this pattern on a 1-minute time frame, 150 candles, it's like, less than 3 hours. So 99% of your trades finish out in less than 3 hours if you were using this pattern on a 1 minute. We'll get more into that in a little bit. So there you go. That's the high probability statistics of a pattern right there. The entry, that's the whole setup, the whole shebang. I love this thing.
So when it bounces off your line, right, your yellow line, you're waiting for it to cross your, I guess, pink line before you get in, and then you're shooting for red to purple.
Yeah, we're just going, basically pink to purple or magenta to purple or whatever you want to call it. And that's it. Like, people are like, why don't you stay in? It's because that drops off 5%. And here's what's really crazy. If you go up to the next fib line, the 1618, that's very popular, the high probability drops down to 35% of the time.
That doesn't feel high.
That's not high. So we lose. You can think about it. We go down from 70. You lose half of your win rate right there, trying to go for that little bit extra. Sometimes you get it. 35% of the time you get it. But that leaves 65% of the time you don't get that. That's why you got to be careful. Like, this is where you can turn a winner into a loser. I tend to book out right in here and move on. Look for another one of these. These happen all the time. Right, and
if I can piggyback on that, just for the people that have come to Opening Playbook a lot, they heard Nathan recently talk about the fact that, when you hold something, your risk reward changes as time goes on and as the values change. So when you get up to that first line where you have a 75% chance of making having a winning trade, once you're there, you now have a lot more value invested in it, and you're taking a risk for a much smaller return on the next 5%, on the next couple of percentage points. So you now have that higher value of what you're holding. It's worth more to you now, and you're risking that greater amount than your initial investment to just get a couple of extra pennies or a couple of extra percentage points on your trade, and the risk reward of holding it for that extra day or week or whatever, the risk reward ratio on that last little bit is way different than your original risk reward ratio. And you're much better off most of the time. Of course, you could always get lucky. You could always get a big win, right? And then you can claim like you're a genius. But most of the time, it's going to work against you. And you would have been better off getting, 3/4 of your total goal most of the time instead of 100% of your goal practically never.
Yeah. And I'm sure everybody wants to know what the stop is, right? Like, all right, you get in here, you get out there. What's the stop though? Now, after doing this, hundreds of thousands of trades, thousands of tickers, $1 below the low, whatever the low is, just subtract $1, and that's where you put your stop in my system. Now, do you have to get out there? No. I usually put an alert there just to see. Now, another trade that I'm actually in right now is Chewy. I'm in early because I was selling puts over here. I was expecting this to be maybe the bounce, and it turned out that it went deeper. And I actually got put more shares down in here in a wheel style trade. But this is potentially going to set up another one of these bounces. Yeah, we just saw the one complete back here into June. Well, what happens after it completes? It goes back and bounces again. We popped up, and we're just kind of hovering right under the trigger point right here. We do have a resistance. I've just found over the years these gap downs, when we do them, we come up to a high and do a gap down. That proves to be a resistance point. It comes in, it has to do with psychology of a trade. You think about it. People were buying into this high, and then this earnings came out right here. This thing gapped down. Those people instantly trapped. We bounced slightly and then went on down. And now those people that bought into that earnings are really stuck, right? You're sitting there debating your life choices, and you're like, oh my gosh, I just want to get back. I want to get my money back. I just want to get back my money, be back to even, quit looking at red numbers in my account. Maybe I'll double down. Maybe you do something crazy. Maybe you buy some calls, right? So as Chewy comes back up to fill that gap, and you just want to get your money back. So as we get close, it tends to sell off, and then we'll get closer, and then it'll probably sell off again. Then it may completely fill the gap and probably sell off again. I see this over and over and over and over and over on stocks that run up into a gap and then suddenly drop and then make a low way on down. They have a hard time filling the gap.
Does it change anything for you if it bounces below the roadmap line?
No, like this pattern really, like it does. All my statistics, like there's all my back tests. It doesn't matter how far below the roadmap line we go, really.
As long as it hits it.
As long as it hits it. Now there are some filters. I have this all automated into a testing system. I do apply some filters on duration. And this one hadn't kicked off, but this one did back here. You can see it got in right there, got out right there. Generally, it's looking for about 40 some odd candles, and it actually waited just slightly because it actually would have picked up that high right there. So it waited just slightly and then got out right at the line. So this thing's very reliable. And right now, waiting, sitting here waiting for the entry. Doesn't care how far below this we go. The gap is an extra layer of resistance, so this may prolong how long it takes to get up here. If you're going to play this on a daily chart and we wait for, all we need is a candle close above that 618 line, right at 42.44. Get the daily close above 42.44. It's on, like Donkey Kong. The target right up here, 51.19. All right, don't make it more complicated. The stop, $1 below the low. The low right down there, 35.09. So 34 basically is the stop. I tend to round off and keep things simple. And my target, I'd probably target 51. Keep it simple. And you can do whatever trick you want to. Like I like to go a penny less than the even numbers. I like to go a penny more than the even numbers. People do all sorts of things. I tend to keep it more simple. So this is a simple high probability pattern with tens of thousands, hundreds of thousands of trades in the arsenal right here. Now, things get even spicier because we can actually load it up and look at Chewy itself and the pattern. Like, how often has this played out on Chewy? It's played out 100% of the time. You're like, oh man, can this thing lose? Yes. All right. Back to statistics. Most of us haven't taken engineering statistics or any other statistics in college. Some of us have, most of us haven't. I did take engineering statistics. 3 trades is not a statistical population. All right. Statistical population is a number, enough of a sample of a population that's representative of what you might expect in the future. Now, if you haven't taken any statistics, you probably have no way to know this, but 30 is a statistical population. So you flip a coin 3 times, you get heads 3 times, you're like, this coin always hits heads. No, that's not the way it works. That's not the way it works. All right. You flip a coin 30 times and you get heads 30 times in a row. Well, now you're starting to play with statistics a little bit. And that particular coin may have a little bit of bias to landing on heads. It's interesting. So 30 is a statistical population. This doesn't have 30, it has 3. So this is fantasy land, fantasy island right here. And this profit factor, which is gross profit divided by gross losses. If you have no losses, you're dividing by 0, which means infinity is the answer. And that's what it gives you, this goose egg infinity thing. But that's also fantasy land because it doesn't mean anything with only 3 trades. We have to fall back on that high probability statistics 74.8% of the time. And the profit factor happens to be 1.2 across tens of thousands of trades, hundreds of thousands probably. So that's the high probability pattern right here. Now, you may be like, all right, well, what would be one that has a statistical population? The McDonald's does. See, it's got 43 trades in the history. 43 right there. That's check. 81% of the time, this one works out. That's better than the 74.8, right? That's better. Like this is better. And then profit factor 1.66. This what used to be over 2, but this last trade was a big fat loser on McDonald's and whacked the profit factor there. I like to find them bigger than 2, but that 1.66 is still bigger than the average of 1.2. So that's a high probability trade. That's a high probability setup. I like it. Sweet. It's good, right?
Yeah, even if you know it took a loss, I mean, high probability doesn't mean guarantee, right? So there's going to be a loss even in a high probability trade. It doesn't mean it's not high probability anymore.
Yeah. Now, even with the 81% win rate, this one, the last one that set up, that just happened back starting in April into June, it was a loser. So can you lose even when you have all the things on your side? Absolutely. That's why I brought this up right here. So maybe like, why are you showing us garbage like this? Because don't get your hopes up. Even high probability stuff still can lose right there. All right. Gave him my best shot. I actually stayed in this trade because look where it bounced. And it came right back up. I'm actually positive right here. Net positive. I bought on the first day was the trigger. The second day pulled back and I bought right there. So I'm actually in right at the 618 with shares only. And so you're like, well, what if you run out of time? I won't run out of time. It's shares. Now, to bring this on home back to something that actually matters. How could you make money, right? How do we make money faster? Like, who wants to wait in a trade for 6 months for a profit? Well, guess what? This works on the 1 minute time frame also. And check it out. This 1 minute time frame, just looking at the last June to August. So July, August, 2 months. We've got 69 trades on the 1 minute time frame right here. 84% of those profitable. And 1.48. Look, this is high probability stuff right here. Check. Bigger, statistical population. Better than the average. And 1.48. I mean, that's pretty smoking stuff. Now, the crazy part to me, I could pull this thing all the way back to the entire history. It's going to take a minute for it to update. That's a lot of data. 25 years. It's going to take it a minute. Servers for everybody probably slowing down. Like, oh. It will take a second, but there it goes. Look at this. 4,950 trades, well over a statistical population, still almost 84% of the time. Profit factor does reduce just a bit. A little bit under the historical across all the trades. This is high probability stuff right here. 25 years this is held. Now, what can we use this to trigger? And the answer would be some zero-day options. Actually have a system that fires off when these fire off and fires off when it exits. That's pretty cool stuff, I think. What do you think, David?
I think that's pretty cool. I think that I think I like being told automatically what to do. That's right up my alley of how I trade.
Yeah, so most people don't like to sit here and watch the 1 minute time frame because how many decisions is that an hour?
Right.
You know,
2 minutes.
One candle every minute. You got to come back and check it every minute. That's 60 times you got to check the chart in an hour. And you got to remember that. Like every minute you got to come back and check. I mean, that's like basically staring at the chart constantly. So I built a system that actually sits here and watches the charts. And it fires off these alerts just like this one on SPY right here from yesterday at 11:52 a.m. Like, was I watching the chart at 11:52? No, but I got this alert right here that told me it was an entry on SPY. Gave me the entry, gave me the target, gave me the stop. Hey, this thing gave me all the information right off of that alert. Told me the upside, told me the risk, and it even automatically picked out a zero-day option I could play to take advantage of that move. That's pretty cool.
That is very cool.
Then this one just happened to play out about 16 minutes later. It played out and hit the target right there. We go look at this. This was today's trade. Roll back in time just a little bit. Let's pop that down. Roll back to yesterday. Here's the trade right there. Popped up through, uptrend, pull back, fired off right there. Boom, right there. Like I said, you got to be careful going for the extra. That one didn't go any higher.
Right.
Started bleeding back down.
Don't get greedy.
Don't get greedy. It did pop up a little bit higher there, but it started bleeding down for the next half hour.
And how many days was that?
That was 15 minutes. This is a 1 minute time frame.
Exactly.
So if you wanted to stay in it another almost hour, you could have waited for this one. But right there. And there's one of these trades firing off right here on IWM right now.
Yeah. So you could right manually do the system. You could get into the stock. You could be in it for a month, 2 months, 3 months. And then the polar opposite of that is the exact same strategy, completely automated. It tells you when to get in, and you're in for way, way less time.
Yeah, way less time.
I like B. I like option B.
This one picked it up right there. This little bitty move picked up, and then went down here. Didn't get a dollar below the. This is where the dollar below comes into play. That would have been down here. You'd be like, oh, that was way underwater. But then, boom. Now, IWM, we'll have to update the report. Take a moment. Thinking. Show you the statistics on this one too. Take it just a sec. There it goes. 4,800 trades. 84% of the time were profitable. And a profit factor 1.04. That means for every dollar you lose, you make $1.04 over the long run. That's profitable, baby. And with zero-day options, I don't usually hang out as long. And I mean, typically you can with the 0 day, you can target 20% and up the win rate even higher than this. So that's the beautiful thing here. You're not locked in to having to do any particular thing. But even if you did want an exit alert, just in case you want to see that thing fired off that exit alert right there. That was the closing trade right there before the closing bell. Does anybody want to know more about this stuff right here?
I think we have a lot of people that are interested in that. We got a few hundred people in the room that are sticking around to listen to you. And you got a few compliments along the way as well.
So
If you can't tell, Jeffrey's a little bit of a math and engineering genius. He
a little
learned to
bit.
trade a little later in life, but had all of this kind of technical know-how and knowledge that he said, if I can apply my math skills and my programming skills to this, I can just set this stuff up to automate and tell me when to get in and when to get out and do all this stuff for me automatically. And now he did that, made a lot of money doing that, and now he's making those same automations and everything available to the rest of us. So luckily he went to a nice kindergarten where they taught him to share, and and now he's sharing with us. So yeah, I've got the presentation that you did the other day up here ready to go, and we can share that with everybody so they can see how to get into this program if they're interested. It'll give you more information about the program and also how to get into it.
Yeah. So I can't say it any better right now live for you. So I do apologize for not doing it live, but I do have another show I'm going to have to go be on. So
Yep.
I want to present this to everybody. It's a truly high probability pattern with easy to follow alerts. They tell you when to get in, when to get out. They're colored green to get in, colored red to get out. I don't know how to make it any simpler than that. I showed you the alerts, and I'd love for y'all to come join me. So I'm going to give you more information about it as soon as David hits the play button, and
Awesome.
come join me.
All right. Thanks a lot, Jeffrey. Have fun on your next live event in 2 seconds. Take care. Thanks for coming.
Yeah. See y'all later.
All right, folks, we're going to get into this presentation here now. Get it rolling for you.
$192 trade signals. So you say, Jack, you asked me how many could we expect? With just the 3 indexes, you can get like 3 a day. When you add on the Mag 7s, you get like 10 a day. So about 1 per day per ticker. And sometimes it's more than that. Sometimes it's less than that. It's about a 74% win rate across all of those tickers over the last year with 3,000 trades. All right. That's probably more trades than anybody wants to take. But the thing is, if you take the day off, don't sweat it. No FOMO. There's going to be more trades tomorrow. That's the point of this right here. And for those of you who are like day trades, I don't have a $25,000 account. No big deal. You can open a cash account, small account, and trade these. It's very easy. And you're not subject to 25,000 when you have a cash account. Now in trading, there's going to be losers. There are some losers in that number there. 26% on average do lose. When we were talking about IWM, it does lose sometimes. So if you can't handle losing trades, don't trade with real money. If this is new to you, I do highly recommend you paper trade.